Okay. In this class, we shall see one problem on admission of the partner. Yes. The balance sheet of Raj Kumar and Rajendra Kumar as on 31st March 2012 is set out below. Raj Kumar and Rajendra Kumar. They share profits and losses. They share profits and losses in the ratio of 2 is to 1. Yes. We shall see. Here are two partners in this problem. One is Raj Kumar and the other is Rajendra Kumar. Yes, the balance sheet is as on 31st March 2012 and they share the profits and losses in the ratio of 2 is to 1. Yes. Okay. Now we shall see the balance sheet as on 31st March 2012. Yes. See carefully at liabilities side, capitals, accounts, capital accounts, Rajkumar 2 lakhs, Rajendra Kumar 1,50,000. General reserve 1,20,000. Yes. General reserve 1,20,000. Now we shall again we are seeing balance sheet as on 31st March 2012, capital accounts, Rajkumar 2 lakhs, Rajendra Kumar 1,50,000. General reserve 1,20,000. Okay. And creditors 80,000. Shall see buildings. Here, if we see asset side, buildings 1 lakh, furniture 30,000, stock 60,000, debtors 3 lakhs, cash 30,000, profit and loss account 30,000. Yes. So we have seen capital accounts of Raj Kumar and Rajendra Kumar, and also there is general reserve and also creditors. And in assets, buildings, furniture, stock, debtors, cash, profit and loss account. Yes, here we should be very careful about the profit and loss account. It is at assets side, so it is loss. If it is shown at liability side, it is profit. But it is in this problem, it is shown at the assets side. Okay, so it is loss. Now we shall go further. They agreed to admit Dheeraj Kumar. They agreed to admit Dheeraj Kumar on 1st April 2012 as a partner in the firm on the following terms. The terms are: 1. Dheeraj Kumar to bring rupees 60,000 as capital and rupees 45,000 as goodwill. Yes, he is bringing 60,000 as capital and 45,000 as goodwill, which is to be retained in the business. Which one? Capital generally is retained in the business. It is used for the business purpose. And the goodwill is to be retained in the business. There is no, as for this term, the goodwill is in the firm. The old partners are not entitled to withdraw the goodwill amount. Just it is reflected in the capital accounts. Okay, now he will be entitled to 1/4 share of profit of the firm. 1/4 of the profit of the firm. Yes. Second point is 50% of the general reserve is to remain as reserve for doubtful debts. So 50% of the general reserve is to remain as the reserve for doubtful debts. Okay. Now third one, furniture is to be depreciated by 5%. Stock is to be revalued at 65,000. So stock is, whether it is increased or decreased. See, stock is 60,000. Stock is 60,000 in the balance sheet. And in the adjustments, it is given as 65,000. So 5,000 is appreciated. The value of the stock is increased by 5,000. Yes, now fourth one is our fifth one. Creditors of rupees 5,000 are not likely to claim and hence should be written off. See, fifth point. Creditors of 5,000 are not likely to claim and hence should be written off. Next one. Rent of rupees 2,000 due but not received has not been recorded in the books. So rent of 2,000 due but not received. He is clearly saying that not received. Not received means it is the income. Very simple. Due but not received. It is income. But if it is given as due and not paid, so okay, it is clear that it not received because it is income. Simply it should be understood. 2,000 is due, not received, has not been recorded in the books. Okay, that should be recorded now. Okay, pause the necessary journal entries in the books of new firm and prepare balance sheet of the new firm. Yes. So now journal entries are first what are increased, what are decreased should be entered in the revaluation accounts. So first we have to write the entries. First, revaluation account debtor to furniture account. Yes. So in the problem it is given that 5% depreciation should be made for the furniture. So what is the value of the furniture? What is the amount of the furniture which is shown in the balance sheet? See, 30,000. 30,000 is furniture. So entry is to be made. Furniture revaluation account data to furniture account. So this is depreciated. So all the depreciated amount should be mentioned at the debit side of the revaluation account. So revaluation account data to furniture. So it is debited because it is an expenditure. That means the value is decreased. So it should be debited. And if you go to the next one, stock is increased. So revaluation account should be credited. See entry. Stock account data to revaluation account 5,000, 5,000, only 5,000 appreciated. So stock is appreciated. Clear? Yes, it is increased. So the revaluation account is credited. Now, shall move further. See, creditors account data to revaluation account. Okay, creditors written off so that we don't have any liability to pay of rupees 5,000. So that should be entered at the credit side of the revaluation account. Accrued rent, yes, it is accrued. Rent is accrued but not received. So that entry is not made. So now we should make entry because a new partner is entering. So accrued rent account data to revaluation account. So revaluation account is credited. It shows that accrued rent is to be shown at credit side. Yes. Now the difference in the revaluation account is to be distributed among the old partners. So revaluation account that are the difference is in the revaluation account, the amount is 10,500 is the profit. So that should be distributed among the partners. That amount should be entered in the capital accounts of the old partners. So what is the amount? 10,500. The ratio is 2:1. Between the Rajkumar and Rajendra Kumar, 2:1. So 10,500 if it is made the 2:1, Rajkumar 7,000, Rajendra Kumar 3,500. So these amounts should be credited in the capital accounts of Rajkumar and Rajendra Kumar. Yes, okay, now. Cash now entry is cash is brought. Capital and goodwill is brought in the form of cash. Clear? Capital is 60,000, goodwill is 45,000. Total is 1,05,000. The new partner is brought the capital as well as goodwill in the form of cash. So entry is cash account data to Dheeraj Kumar's capital account to goodwill account. Dheeraj Kumar, the new partner, brought his share of capital and goodwill. It is okay. Now, shall move further. So goodwill is 45,000. That should be distributed among the old partners, Rajkumar and Rajendra Kumar. This 45,000 rupees is brought by the new partner in the form of goodwill, and this goodwill should be distributed among the partners. So entries, see the entry, look at the entry, goodwill account that are to Rajkumar capital account, Rajendra Kumar capital account. So this is distributed as per the old share. The goodwill distributed among the sacrificing partners in their sacrificing ratio. Very simple. The old ratio should be taken into account, 2:1. It's enough. Now, Rajkumar capital account. Rajendra Kumar capital account. That are to profit and loss account. Yes. This is the most important entry in this problem. This is loss, which is shown at the assets side. So that should be distributed. This is a loss. So this should be debited to the capital accounts of the old partners. This loss is concerned to the old partners. They have to bear. So Rajkumar capital account, data Rajendra Kumar capital account, that are to profit and loss account. So ratio is 2:1. So 20,000 and 10,000. Yes. Now we shall move further. So general reserve account that are here, general reserve account that are to Rajkumar capital account, to Rajendra Kumar capital account. Okay, it is distributed among the partners. Now these are the capital accounts. See, balance, these are the capital accounts of all partners. So by balance 2 lakhs, 1,50,000, it is given in the balance sheet. Goodwill, here 30,000, 15,000 must be here, 15,000, it is a small mistake. Goodwill is equal to 30,000, 15,000, that is a mistakenly 1,500 is written, but goodwill is 30,000, 15,000. Now, and revaluation account, already we have made entry, so 7,000, 3,500. General reserve also distributed, 40,000, 20,000. Okay. So the total is 2,77,000 of Rajkumar and 1,88,500 of Rajendra Kumar. Yes. Now, if we see the debit side, 20,000, 10,000 are appearing. Both are. This is the loss which is borne by the old partners in their old ratio, that is sacrificing ratio. So 20,000, 10,000. Now, so if we deducted these 20,000, 10,000 in these 2,77,000 and 1,88,500. So the resulting figure is 2,67,000 and 1 lakh 7 here 2,57,000 and 1,78,500. Okay, now we shall go further. Yes, this is the new balance sheet. As on 1st April 2012 of whose balance sheet is this? It is a balance sheet of 3 partners, including Dheeraj Kumar. See liabilities, capital accounts, 2,57,000 Rajkumar, Rajendra Kumar 1,78,500. These two figures are arrived in the here. Only that balance is not made. We simply calculate. This is the 1 lakh 2 lakh 77,000. Here also 2 lakh 77,000. The difference is if we deduct the 20,000, the difference is 2 lakh 57,000. So like that 2 lakh 57,000 is arrived. This is capital of Rajkumar. Likewise, Rajendra Kumar 1,78,500. Yes. Now, new partner has brought how much? 60,000. It is mistaken, 60,000. Not 6,000. It is 60,000. Yes. The total is here how much it is brought. Yes, okay. Now 3 lakhs, 4 lakhs, 95,000 is total of the capitals. Okay, it is if we add 60,000 to this. Okay, now creditors 80,000. It's okay. Now in this 80,000, from this 80,000, 5,000 should be written off. 75,000. Now we shall see assets side. Stock 65,000. In the old balance sheet, it was only 60, but in this 65,000 because 5,000 is appreciated and cash 1,35,000. This is shown in the working notes below this problem. Cash is 1,35,000. Furniture is depreciated 1,500, so that 28,500. Yes, debtors. See, 50% should be reserved for doubtful debts. Debtors are how much? Yes, we shall see in the problem. Yes, debtors are, yes, you see, debtors are 3 lakhs. 3 lakhs. Yes. See, here debtors are 3 lakhs. So here some mistake is gone. 20% it should be rectified. 20% reserve for doubtful debts. So 20% it should be rectified. 20% reserve for doubtful debts, that is equal to 60,000. So 3 lakhs into 20%, 60,000. After deducting this, the arrived amount is 2 lakhs 40,000. Next, accrued rent 2,000, already mentioned. It is an asset. And building, it is given 1 lakh, and here we have written 1 lakh. And now both are balance sheets at both sides is 5,70,500. So in this already ratios are calculated. These are the working notes. It will be very useful to you. See, old ratio 2:1. Dheeraj Kumar's ratio 1/4. So let the total share of firm is 1 is equal to 1. Remaining share of firm is 1 minus 1/4. That is equal to 3/4. Total share is 1 and the given share is 1/4, which is given to the new partner. The remaining share is available for the old partners are 3/4. So these 3/4 should be multiplied by the old ratio. 2:2/3. Rajkumar as well as Rajendra Kumar. New share is 3/4 into 1/3. 3/12. So new ratio is equal to 6/12, 3/12. This is equal to 3/12 because this 4 is 4 into 3, 12. And in the same way, into 3, so 1 into 3, 3. 4:3:3. And it is minimized to 2:1:1. This is the new ratio. And sacrificing ratio is old ratio minus new ratio. Rajkumar sacrificed 2/3 minus 2/4 is equal to 2/12. And Rajendra Kumar sacrificed 1/3 minus 1/4 is equal to 1/12. So sacrificing ratio is equal to 2:1. Yes. Now, distribution of general reserve. It's very easy. 60,000 into 2/3. This is the whole ratio. As per the whole ratio, it should be distributed. See the Rajendra Kumar ratio, amount regarding the general reserve. 60,000 into 1/3 is equal to 20,000. Now, it's okay. Already the second, another one is distribution of profit and loss. So this is a loss, 30,000. So it is also shared 20,000, 10,000. Goodwill also 45,000 is brought. Distribution of Dheeraj Kumar's share of goodwill. Okay. See 45,000 it is brought by him. Rajkumar share is 30,000. Rajendra Kumar share is 15,000. Okay. Now this is the revaluation account. Profit and loss adjustment account or revaluation account. Both are same. See, furniture 1,500. This is depreciated. Stock is increased. Creditors liability is decreased. And accrued rent is written. So 12,000, 12,000 difference is 10,500. This balancing figure 10,500 should be distributed among the all partners. This is a profit. If it is seen at the debit side, it is a profit. If it is seen at the credit side, this is the credit balance. This is the credit balance because the credit balance is much if we compare with the debit side. Okay, if the debit balance is much, then loss will be occurred in revaluation account. In this revaluation account, now these two partners are earned the profit. So it should be distributed. Now cash account. See, this is the most important one. Cash account. What about this 30,000 balance? 30,000 B by D 30,000. This is the figure which is shown in the beginning balance sheet. Cash 30,000. And 60,000 is Dheeraj Kumar's capital. So first, for this entry, cash account data to Dheeraj Kumar capital account, we have made an entry earlier. Cash account data to Dheeraj Kumar capital account, 60,000. And cash account data to goodwill account, 45,000. So, $30,000 is the beginning balance, 60 is the capital, 45 is the goodwill. Okay, clear. So if we sum up these three, we get 1,35,000. This 1,35,000 is shown in the ending balance. That means new balance sheet, which is prepared after admission of the Dheeraj Kumar. So 1,35,000 we shall see. 1,35,000 in the balance sheet. See here the cash is 1,35,000. Okay. So this is regarding the cash. Once again, you see this is balance 30,000 in the beginning balance. Dheeraj Kumar capital 60,000, goodwill 45,000. This is the 1,35,000 is the balancing figure. 1,35,000 is a cash. So in this problem, I have seen yes, we shall see adjustments once again so that it is very easy to you to solve the other problems. We shall see adjustments once again. So Dheeraj Kumar 60,000 should be brought in the form already brought, yes, in the form of brought in the form of capital, and 45,000 as goodwill. So these two entries are met. This goodwill is to be retained in the business. So the all partners are not entitled to withdraw the amount of 45,000. Goodwill should be retained in the yes. Goodwill should be retained in the business. So that should not see one. We shall see once again. Yes. Okay. We shall see 60,000 as capital, 45,000 as goodwill, and goodwill is to be retained in the business. And new partner is entitled to 1 by 4th of profit of the firm. So the new ratio should be calculated according to this. So in total ratio, he has entitled for 1 by 4th. Remaining 3 by 4th should be distributed among the all partners. So their share already we have seen below. And so 20% should be provided for the doubtful debts. Okay. Now furniture is to be depreciated by 5%. Yes. Furniture is to be depreciated by 5%. So it is decreased. This value is decreased, depreciated by 5%. 5%. Now stock is to be revalued at 65,000. In beginning balance sheet, 60,000 is given. At the ending, it is 65. So 5,000 is increased. And creditors 5,000 are not likely to claim. So they are not claiming. Hence, should be written off. So we do not have the liability to pay 5,000 to the creditors. So it increases our balance in the revaluation account. Rent of 2,000 due but not received. It is due to us. It is an income to us. So it is not received and not recorded. So now it is to be recorded. It is also the aspect which increases the balance of revaluation account at the credit side. So it should be mentioned at the credit side. Like that, we can do very easily this kind of problems regarding the admission of the partner. Already, all these are all we have seen the journal entries. Yes. Now loss is distributed among the all partners. General reserve is also distributed to the all partners, and these are the capital accounts of the all partners. And this is the balance sheet after admitting the new partner. See, this is so capitals are increased, and here cash is increased, stock is appreciated, furniture is depreciated, debtors also 20% decreased, Doubtful debts 60,000. So next, accrued rent also mentioned, it is a income, and building is mentioned as it is because there is no change in it. Okay, with this I think you have understood this problem, and you can do more problems based on this problem. Okay, thank you.